Hey guys, Steven here, aka the Boiler Master, with another DD video for you on IQST. We had some bombshell news released in January. It was a pretty exciting month. We've got a whole lot to talk about there, and naturally, I made a DD video at the beginning of January. I went through some of their charts and the revenue projections and forecasts, and just like they do every year, they made some announcements that blew away all expectations and broke my charts again. So I want to go through some of the news and then I'll go through a couple of my charts and we'll look ahead and see how 2024 is looking. Before we get into it, I want to explain that there's still a lot of unknowns. When they made the announcement about the acquisition, we had a ton of questions. People wanted to know what was going on. And I pretty much said, we got to wait on the 8K filing. We don't even know what they're paying for it yet. And then they filed the 8K, and again, we still don't have all the answers because there's a couple of ways this could play out. We know what they're paying for it, but how it's actually going to be financed and paid for is still yet to be seen. So I was going to hold off and make a video after we had all the facts because I don't want to put anything out there that's wrong. However, I'm getting asked a million times a day what's going on, and I figure I might as well just make a video from a 1,000-foot view of it and cover the basics of what we do know, because I get it. I don't expect everyone to go out there and spend the time reading 8K filings that are hundreds of pages full of legal jargon that just confuse you more than it answers questions. So I'll give my take on it, but keep in mind I'm not a financial advisor. I do have some backgrounds and stuff like this and a business degree, and I've owned a business, so I get the basics of it, but I don't do this for a living. I don't give professional advice to anybody, and I'm not here to pump any stocks. I just do a lot of research. I like the stock, and I'll share what I know, and that's a fancy way of saying don't sue me if I'm wrong about something. So verify it, read the 8K filings yourself, but we'll get into it and share what I've got. So this is their PR from January 22nd. It says that IQST is purchasing 51% ownership of QXTEL. Says that that's expected to add $80 million in additional annual revenue, bringing the company up to $250 million a year. They also expect that they will have $3 million in positive operating income now. So we'll talk about the revenue and what that's going to do to the financials later, but let's look at QXTEL a little bit first. So QXTEL is a major company, $80 million in revenue. That's where IQST was like, what, a year and a half ago? So they're not a small acquisition like Smart Biz and Whistle were. They're well known in the telecom industry. It says that they've been in business for over 20 years. And the PR even says that the highest value of this acquisition is the top telecommunication executive talent at QXTEL, which is one of the key features that makes this acquisition so compelling for IQSTEL. The names of QXTEL executives are essentially independent brand names well recognized within the international telecom industry. It is important to remark that the acquisition agreement is intended to maintain QXTEL operational continuity, ensuring the seamless transition for all QXTEL customers. So basically what that means is that they're acquiring QXTEL, but along with that, they're getting all the employees. The leadership team is staying on, the CEO is staying on, all those business relationships that they've spent 20 years building is staying on. And what that's important is because IQST is known for cross-selling between their telecom subsidiaries. So bringing these two teams together and keeping all those management people with all their relationships is what's going to help them do the cross-selling and that high level of growth after the acquisition has already taken place. So looking at QXTEL's website, we can see that they operate on 5 continents. It says they're in the Americas, Europe, Africa, Middle East, and Asia. They do have an office in Florida, Buenos Aires, and Turkey, and it says that they're headquartered out of London. Honestly, we could make an entire video talking about QXTEL, but you guys get the point. It's a pretty big company. It's a really good move for IQST. It's going to put them in new markets, and they got a good team of people to help them expand. So if we get back to the actual acquisition, we'll go into the 8K, but first, one of the big confusions around the acquisition's announcement was the closing date. They didn't word it the best. They talked about it being a done deal, closed, but then said there was a 60-day period. So what my understanding is, reading it myself and talking to the company and actually getting some confirmations, they have signed the agreement. They have a purchase agreement in place. They are buying the company, and now they have until actually April 30th to finalize the deal. But the PR said that they expect to finalize everything within 60 days. Talked a lot about this online, and I'm just going to give you the example that resonated with most people. It's like buying a house, guys. You negotiate everything, you come to a purchase price, you come to agreements on all of it, you sign the deal. You have a legally binding contract. They are buying QXTEL. So it's like putting a contract offer on a house. You get a signed contract, you're buying the house. It's not officially yours until you go to closing and make payment. That's where IQST is at. They have already completed all of the DD, all that happens in advance, everything is moving forward. The final terms of the agreement have to be executed, which means things like they've got to pay the rest of the money. So they expect all that to take place within the next 60 days. A couple days later, we got the 8K filed. So let's take a look at what's in that. So like I said, the 8K has a lot of information in it. It's got the purchase agreement to buy QXTEL. It's got the offering agreement that's raising funding from M2B. And I think one of the filings was 68 pages. Attachment A was another 28, and Attachment B, and it's hundreds of pages. So I'm going to give you guys a high-level overview, my takeaway from it. And if you guys want more details, you're just going to have to read it yourself. So IQST is buying 51%, the majority stake of QXTEL. It is being purchased from Yukon River Holdings, Ltd., which is the corporation that owns QXTEL currently. They're paying $5 million for the company. So far, they've paid $1.5 million cash as a deposit up front. There's another $1.5 million due at closing on or before April 30th. And then there will be an additional $2 million to be paid in the form of cash or shares. So the seller gets to elect at his choosing whether he takes the final $2 million as cash or shares of IQST stock. So if he takes shares, it'll be at a 20% discount of the 5-day VWAP. And if he takes cash, it will be in the form of 8 payments, $200,000 a month over the next 7 months, and the 8th month will be the remaining $600,000. So it's a $5 million purchase price with $3 million, and then the remaining 2 as either cash or shares, and it is up to the seller. So just some rough math on it. We don't know what the 5-day VWAP will be. Well, first of all, VWAP is volume weighted average price. So when they finally close and seal the deal, they'll look at the share price for the last 5 days, get the average of that, and then if he chooses shares as the final $2 million in payment, he'll get a 20% discount from that price. So we don't know what the average price is going to be when this closes. Right now, the stock's a little over 21 cents, so a 20% discount from that would be 17 cents a share. So if he were to elect to receive shares at a little over 21-cent share price, $2 million, 20% discount, 17 cents a share would be under 12 million shares. If the share price goes up, if it's 30 or 40 or 50 cents by then, he'll get significantly less. So hypothetically, if we're back at a 30-cent share price and that's the average VWAP when it closes, a 20% discount from that would be 24 cents a share. So if he's getting $2 million worth at 24 cents a share, then he would get about 8.3 million shares. We don't know how many shares he would get if he chooses shares because we don't know what the price will be at the time. We just know that it's $2 million in value. We do know that if he takes cash, it'll be in 8 monthly payments, which would make it paid in full by the end of the year, though. So a little bit of an unknown there. We'll talk more about dilution as we get into the financing and how they're paying for the cash portion of the acquisition. Before I get into the financing, I want to add a note, though, that Yukon Rivers, if they accept shares as payment, they have to give IQST first right of refusal if they try to resell the shares. That tells me IQST doesn't really want them to accept shares, but they want to throw the option out there if they want to take a stake in IQST. So if they accept $2 million cash as shares and it's a 20% discount and they want to just go back and resell them, or the stock runs up a little bit and they just want to dump them on the market, they don't have that ability. They're going to call IQST up first and say, hey, first right of refusal, do you want to buy the shares? Give IQST the option of buying them back first. So really, really glad to see that in there. And it means that they're not looking to just get some cheap shares and offload. All right, so how are they funding this? Well, it got complicated because they're borrowing money from M2B Funding Corp, which surprised everybody because we thought they were going to be selling a bond to LDA Capital. The company actually did clarify this for us. They made some posts. They let us know they're still working with LDA Capital, and they addressed it in the shareholders meeting last week as well. So we do know that they are still working with LDA Capital. They confirmed that they are trying to move forward, sell them a $5 million bond. And they said that things were moving too slow with LDA. They weren't going to get the bond sold, and they needed to close this acquisition. So they went ahead and closed the acquisition using M2B Funding Corp as financing. Now, a little bit of speculation here, but my thought is M2B Funding was a backup plan. They used them just because they had to get it closed, which makes me think that as soon as they finish the deal with LDA Capital and sell them the 5 mil bond, that they're going to use that cash to pay off the funding from M2B Funding Corp. So I'm going to cover what's going on with M2B funding, but as far as what this will look like a year from now, payment terms and all of that, I'm not going to go in all the details because I don't think that's actually going to happen. If they get the funding from LDA Capital, M2B will go away completely. They'll just pay them off with the $5 million from the bond sale. But the basics of M2B funding, it is potentially $3.5 million in funding. They did already borrow $2 million. We saw the shares increase. The outstanding shares went up, I think it was about 1.8 million shares a couple weeks ago, and we were all wondering what that was about, and we thought it might be related to an acquisition, and it obviously was. So part of the funding deal with M2B says that it's in two trenches. The first trench is $2 million. They have the option of borrowing the other $1.5 million later. They don't have to, but they can. So with those two trenches, part of that includes kicker shares, meaning when they borrow $2 million from M2B funding, they owe them an upfront expense of 10%, and that 10% is to be paid in the form of IQST shares. So if you do the math on it, $2 million at 10% is $200,000, and it says that it's issued as shares at a value of 11 cents a share. Some people have asked why 11 cents? Well, it's a funding corporation, and you have to give them some incentive, so it's always at a discounted price. So 10% of it being 200,000 at 11 cents a share is 1.8 million shares, which is exactly what we saw the outstanding shares increase a few weeks ago, shortly before this was announced. They have confirmed that they did borrow $2 million from them. The purchase agreement for QXTEL required $1.5 million put as a down payment, a deposit for the acquisition. So they borrowed $2 million from M2B. They've already spent $1.5 million as a deposit for the acquisition. Now, another $1.5 million is due at closing, and they're set up to be able to borrow another $1.5 million from M2B if they need it, meaning if LDA hasn't come through for them, if they're still working on that deal and haven't sold the $5 million bond yet, they can borrow another $1.5 million from M2B funding to get the deal done and close. So with M2B, assuming that this carries on, it is at 18% interest. A lot of people are freaking out about that, but reality is that's not horrible. In today's environment with interest rates and considering IQST's history, you got to remember that they cleared up all that toxic debt from back in like 2020. We were talking, I know one of those notes was at 28% interest, so 18% is not horrible, especially considering that this is just a one-year loan. It's somewhat of a short-term funding. So part of the agreement included 6 months worth of interest paid up front. That's a charge that they have to pay. I believe that's in there personally. I think it's there because they're expecting to pay this loan off really fast as soon as the LDA funding comes through. And nobody wants to give you a loan at 18% that you pay off a week later and you make a few dollars and it wasn't even worth your time to go through all this paperwork and contracts and everything. M2B has to make some kind of profit off of this to be worth their time. So Kicker shares, if they move forward borrowing the other 1.5 million from M2B Funding Corp, that will be $150,000 of value in IQST shares they will give them. So $150,000 at 11-cent share price would be 1,363,636. So 1.4 million shares. So we saw a 1.8 million increase to get the 2 million funding. If they move forward borrowing the other 1.5 million, we'll see another 1.4 million shares increase, which is going to put it at about 3.1 million shares. So borrowing from M2B is costing them 3 million shares. Now, this is a convertible note. There is the possibility and potential out there that, in the event that they default, this could convert and they could take the payment as shares instead of cash repayment. 100 pages worth of legal formalities in there and what if scenarios and everything like that. But I can tell you, and the company's confirmed, the intent of this is just a financial loan to be paid back, and they have a plan to pay it back. They don't anticipate anything converting to shares. And so all in all, this deal with M2B funding should only cost the company dilution being 3 million shares. And that's if they actually borrow the other 1.5 million. If they don't, there won't be any more shares tied to it. It'll just be the $5 million corporate bond sold to LDA Capital that is non-dilutive and no additional shares. So if we want to look at dilution as a whole, right now it's been 1.8 million. That could be all we see. Maybe they don't need the other money from M2B Capital, and maybe the seller of QXTEL decides that he's going to take the remaining $2 million in cash payments instead of shares. So best case scenario, we're looking at 1.8 million shares, which is nothing. It's not a big deal. It's almost virtually no effect. IQST has 173.3 million shares right now. 1.8 is nothing. Worst case scenario, if we're at our current share price, we said that Yukon River Holding taking the remaining 2 million of shares would be at current share price around 12 million shares. So it looks like our worst case scenario is M2B Funding gets 3 million shares, Yukon Rivers gets 12 million shares, and total dilution from this would be about 15 million shares. So 15 million. We ended the year at 171.5 million shares last year, so that's what we started 2024 with. If they went worst case scenario, added 15 million shares, the dilution from that is 8.7%. So we're looking at worst case scenario, the total shares increase is 8.7%. But this acquisition, putting us at 250 million revenue, is going to grow the company 79%. So if we want to look at some numbers there, we'll see that this is obviously a major move, good value added. And if anybody talks about dilution being out of control, if Yukon accepts shares as payment and the bears start saying dilution, 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 look at the math and just educate yourself and know that this is a really good deal for us and it's worth every penny, every share. They're adding $80 million in revenue, $3 million in operating income, and that's just a start because we know they're going to cross-sell the shit out of it. All right, so speaking of cross-selling and revenue, let's get into some of the fun stuff. So we know they're telling us now they're going to do $250 million in revenue. That is 79% year over year. That's up from 50% growth last year and 44% growth the 2 years prior. So growth is clearly continuing to accelerate even more rapidly. 250 million is $110 million in annual growth this year. If you remember correctly, they just crossed the $100 million milestone a few months ago. Now they're adding $110 million in revenue in a single year. It's insane. But 250 mil, that's honestly, it's on the low end. And they even told us that's before any of the cross-selling that they're expecting. So what would they do in 2024 if they didn't have any organic growth? So looking at the numbers, year-to-date revenue for 2023, preliminary revenue for last year was $140 million. We haven't seen the filing yet, obviously, but we can look at the Q3 filing, and we know that for the first 9 months of the year, they did 97.2 million. So that tells us Q4 should have done $42.8 million. If they just repeat Q4 performance all of this year with no growth, that would be 171.2 million for the year. Adding in $80 million from the acquisition puts them at 251.2 million before any growth. Now, it's slightly less because the agreement was signed January 19th. It didn't take effect on the 1st. So take about half a month of revenue away from that acquisition. It's about $3 or $4 million less. So we're looking at $247 million before any growth this year. Now I'm going to add to that. The agreement is dated January 19th. As we talked about, it's not completely done yet. They still got to pay the remaining value purchase for the company. It's my understanding that everything will take effect January 19th, assuming everything goes smooth. All the financials will be reported as of the date of the agreement, not the day that they make final payments and that. If I'm wrong, let me know in the comments, but that's my understanding. So 11 and a half months of this year, they will be reporting QXTEL's revenue on their balance sheet. So looking at that, last year they grew organically, meaning they didn't have any acquisitions in the year 2023, and they grew over 50%. It was 50.2% growth, adding around $47 million in revenue organically. That's going to continue. They're not going to go from growing 50% last year organically to no growth this year. So 250 million, just a baseline. So looking at how they've grown in the past, my last video and a lot of posts online, I've really dug into the acquisitions of Whistle and SmartBiz that took place in 2022 and how much they've grown. They're doing about 3 times the revenue that they were expected to do before they were purchased. So I'm not going to say QXTEL is going to grow 3x and do $240 million in revenue next year. It wouldn't surprise me, but let's look at something realistic. They're definitely going to have some growth. The company's been growing 50% a year, 44% a year. So with 250 as a baseline, I am very, very confident they're going to do at least 300 million this year. That's 50 million in organic growth, cross-selling with QXTEL, doing 250 as a baseline. That's only adding 20% from cross-selling. 250 to 300, that's $50 million, but it's only 20% growth, and they do a lot more than that. You got to remember that 250 million is their forecast right now in January, and they up their forecast every single year. Last year, their forecast in January was only 105 million, and they beat that by 33%, doing 140. So January this year, they're now forecasting 250 million. If they beat that by 33%, it'd be $332 million. Can they do 332 million this year? Absolutely. So looking at the year-over-year growth, no growth at all, 250 million puts them at 75% year-over-year. If they do 300 million like I think they will, we're looking at 114% growth year-over-year. And if we get a little aggressive with it and say they're going to do $332 million, we're looking at 137% growth year-over-year. That's not insane. It's entirely possible. That's what the numbers are saying and the trends, that there's a good chance they come close to around 330 million. Personally, I'm going to set my sights at 300 because you guys know I like to be conservative. As I say, I'd rather be pleasantly surprised than disappointed. So looking at the revenue increase with dilution, this is where I said that the dilution is a non-issue. So basing things on 300 million revenue with best case on share dilution, the current shares 173.3 million remaining the same. We've got 300 million divided by 173.3 million shares would put us at $1.73 revenue per share. That would be up from 82 cents a share last year for 111% year-over-year improvement. Worst case on dilution we discussed with the M2B additional shares for the other 1.5, and if the seller of QXTEL accepts shares instead of cash, the 15 million increase would put us at 188.3 million shares. So 300 million revenue by 188.3 million shares would take it to $1.59 revenue per share. Up from 82 cents, that's a 94% year-over-year increase. So even the worst case scenario is still going up to $1.59 revenue per share. Best case is $1.73, but again, that's based on 300 million revenue, and I think that's a very, very achievable goal. They're probably going to surpass that. And like I said, it's only January. What else are they going to do this year? The company is already telling us that they are looking at other telecom acquisitions right now as they speak. And we can speculate all day on what's going to take place there. I've got some pretty good ideas on at least one of the acquisitions I think they're going to make. I don't want to get into too much speculation there, but we've made some posts about it in the ambassadors group on Facebook if you guys want to discuss that. And also, they gave us a lot of information in the shareholders meeting. So one example for you guys is the IoT labs and selling their smart tank and smart gas devices. So in the shareholders meeting, they told us that they now have 3 customers for that device. They were working exclusively with BASF in field testing. We know that they had done 2,500 units installed in the field, and they were making changes to those over time and field testing them and improving them, and they've continued working with BASF in the meantime. So BASF is the largest chemical company in the world. Now, they've told us in a couple of PRs that they were also in discussions with gas distribution companies. So they were working with the largest gas distributor in Mexico, and they were in discussions with a good opportunity in Saudi Arabia. They reiterated to us in 2023 that these discussions and negotiations were still ongoing, and now they've told us that they're actually working with 3 different companies, not just BASF. So we have to assume that they've got a hand in the gas industry now as well, and they're saying that they expect significant increase in IoT Labs' revenue as a result of this in the year 2024. So where are they going to go with IoT Labs? Until now, IoT Labs has been the biggest subsidiary of IQST. Now that they own QXTEL, QXTEL is the biggest subsidiary, but IoT Labs is one of their biggest growing companies, and they might surpass QXTEL this year with all of the new potential coming from the smart tank devices on top of the telecom sales that IoT Labs has. You know, we're talking about what 2024 is going to look like, but there's so much more going to happen throughout the year. It's only January. The 300 million may even be the very low end. When we talked about 2025 projections, we just laugh. We say, call it 500 million. We don't know. I don't even want to project it out because honestly, 500 million is probably going to be on the low end because the company is not just going to stop with their acquisitions campaign. They're not going to stop pursuing these IoT devices. They're not going to stop cross-selling. This $80 million that QXTEL brings, I firmly believe by next year in 2025 is going to be 150 million. It's what IQST does. They buy acquisitions in the telecom industry. It puts them in new areas. They cross-sell between the subsidiaries. They sell existing products to a new customer base that they now have access to. And they get these companies and they double and triple their revenue in no time flat. That's why these companies want to be part of IQST. So how do we project it out? Reality is we can't. But I'm telling you, I think we're doing 300 million this year at a bare minimum, and I can't even put a number on 2025. I tell you guys again, I've been saying for years that 2024, 2025 is when I expect everything to turn around. That's when I thought we would be worth the minimum valuations to list on the NASDAQ, and we're there, guys. Everything is going right. Once they've got this revenue on the balance sheet, they continue just doing what they've been doing. It's going to happen. It's not going to stay a damn penny stock trading at 20 cents and 15 cents forever. Not when you're making moves like this and doubling the size of your company in a single year. All right, so let's talk about what it's worth, or anyways, what it's potentially worth one of these days if it sees fair value. If we get institutional investors, if we uplist to the NASDAQ, what's the realistic valuations? In my last video, I talked a lot about that. I threw a lot of valuation scenarios out so you guys can see what you think. Explained why I think that 1.5 price to sales ratio was fair. Talked to Shane about it. He came in and he concluded that he thinks because of their extreme growth, so much above industry averages, he leans more towards a 3.0 price to sales ratio. So if we just update those two charts, basing it on 300 million revenue, which I told you guys I think is very conservative on it, and adding in the worst case dilution from this acquisition, which I think is 188.3 million shares, would put a fair value at $2.39. If we go with a price sales ratio of 3.0 with the same numbers, that would put fair value at $4.78. That sounds pretty crazy, but that's what the numbers say. If you think 1.5 is fair, we're talking 239 off of these numbers we think they're likely to do. If you think 3.0 is fair, we're talking $4.78. And this is being conservative. They're probably going to show more than 20% organic growth, beating 300 million revenue this year, and they've already told us they're working on a second acquisition. In fact, their PR on December 12th said one of two acquisitions may close before year end. The second acquisition is anticipated to close within the first 6 months of fiscal year 2024. So the first one's already adding 80 million in revenue. What will the second one add? I'm saying 300 million revenue. I think that's on the low end. I'd be conservative. That's just 20% organic growth. But it wouldn't be crazy to say they're likely to do between 350 and 400 million revenue this year. I mean, how do you argue with that? We didn't expect $80 million from this acquisition. We don't know what to expect from the next one. We don't know what will happen, but 300 million is conservative. 350 to 400, if they close an acquisition, that's pretty damn likely to happen. And this is building in like worst case on the first acquisition, adding 15 million shares. That may not happen. I can run these projections and show you, if we don't add those shares and if they close this other acquisition, what those numbers look like, but nobody would believe them. I can show you what a 5.0 price to sales ratio, a nice blow off top, really aggressive, saying this company's growing 100% this year. 5.0 is fair, but nobody's going to believe the damn numbers. It's insane. So I don't know. I still say a 1.5 is very, very realistic valuation for this company as fair value. Being conservative on the numbers, that says 2024 fair value is going to be around $2.39. That's not building in a lot of speculation for what they're going to do in 2025 or the next couple of years or what's going to happen with this acquisition. Being aggressive on it, saying, you know what, everything's going to continue. They're worth more than the averages for the telecom sector because they're growing 10 times faster than any other telecom companies on average. And so a 3.0 price to sales ratio is $4.78 as fair value. I'm going to be honest with you. I used to laugh when I saw everybody would say $5 and beyond, $5 and beyond, and all this crazy stuff. And I'm like, yeah, they're going to get there, but that's so far out, just whatever. To each their own. But here they are after this acquisition. I mean, $5 it's not crazy at all. What are they going to be doing next year, 2025? Is $5 going to be significantly undervalued? It looks like it probably will be. So, there's a lot of frustration from people. They're still talking about NASDAQ, and they said in their shareholders meeting they are planning on a NASDAQ uplisting in 2024. And when I first saw that, I was like, come on, guys, back off from that. But looking at these valuations, there's no reason that should not happen. I don't know what the share price is going to do, and it's the OTC market. Valuations don't mean a lot. This company could get beaten down and stay where it's at for a couple more years. But reality is, sooner or later, somebody's going to look at this and say, you know what? I'm adding it to my portfolio and I'm buying $10 million worth. Some institutions are going to pick this up knowing that fair value is 10x, 20x, 30x higher than current price, and it's going to happen sooner or later. They're not going to become a $250 million revenue company, $500 million a year, $1 billion a year, and just sit at a 30 million market cap forever. It's just not going to happen. It's just mathematically, it's virtually impossible. The company is becoming more and more valued every single quarter that passes, and sooner or later, the share price is bound to catch up. I think that's enough of my opinions on it, though. I'm honestly just kind of a nerd guy that likes charts and math and stuff. Let's get a hold of an actual full time investor friend of mine. You guys know Shane Crawford. He's not a financial advisor either, but he does invest full time. Let's see what he thinks about this and get his opinion on the acquisition. See if I can get him on the phone here.
Hello?
Hey Shane, how you doing?
Doing good, man. What's going on?
Oh, not much. Doing another video that we were talking about. I've just wrapped up on the future valuations. I talked a lot about this acquisition. Gave a general overview of the 8K, the funding deal that's going on. Man, there's just a whole lot to talk about, and wanted to get your opinion on a few things, but with everything going on, I figured I'd just turn it over to you for a second and see if there's anything specific you wanted to start off with to add.
Well, there is a lot to digest.
Mm.
And, you know, I listened to the entire shareholder meeting, and some of the things that stood out to me was there were already some smart tank contracts going on there. And I think they said 3 small ones, and ramping up production this year for some larger potential contracts. So I'm pretty enthused about that. So the LDA deal is still in the works. So the it's 5 million bond, right? 5 million first, 5 million after the uplist, I believe is what that was.
Yep.
And also, I specifically heard Leandro say he's looking at more acquisitions for the year. So, okay, another thing that instantly stands out to me that I can't not think about, they say they're going to do 250 million revenue this year. Okay, we're $40 billion company. When have they ever not blown expectations out of the water? You know, so this is why I've been kind of saying, okay, if they're saying 250, the reality is minimum 300. But man, if they add in another acquisition that's the same size or even half of the size of the one they just did, QXTEL, holy cow. Like, are we looking at 320? Are we looking at 350 million revenue this year, 2024? And then don't get me started on the kind of potential we're looking at for 2025. It's mind-boggling. Like, all the things that we were hoping for so long that would start to happen, it's now happening. And floor. You know, it's one of those things like, you know it's coming, but then when it finally does, it still takes you by surprise. Like, it still shocks you.
Yes. Yeah, I can't tell you how surprised I was by this acquisition. I remember when we talked in the last video that we were talking about how big this acquisition could be, knowing they had 5 million in funding. But man, we talked about how big acquisitions could be after they had access to funds that the Nasdaq would provide, and how those could be maybe in the tune of 100 million. They damn near did it now. $80 million. Man, we did not see that coming.
Yeah, it's crazy. Like, and so now what the heck happens if they get some Nasdaq funding? They could get another company that's 80 to 100 million. Like, the route to becoming a $1 billion company might not be that far away.
It's not, and you say Nasdaq funding to do it, man. They don't need Nasdaq funding. So December 12th PR, I already shared that, reiterated that they told us they were potentially closing this acquisition before the end of the year. They signed the agreement January 19th, but they have a second target acquisition they anticipate closing the first 6 months of this year. I know you know that already, but point being, This acquisition was 5 million, and that was why they were going initially after 5 million from LDA,
Mm-hmm.
and they have another one planned. So they already have a plan in place for another acquisition right now that they already have an idea of how they're going to fund. So hell, they might add another acquisition this size this year. They don't need NASDAQ to do it. They're doing it while they're on the OTC with the funds available that they can get a hold of.
Like you actually think about the fiscal responsibility that they have and how they are working with. And that's what really gets me so excited for the future. Because, everybody's got it in the back of their head, like, hey, we're going to make it to NASDAQ and then I'm going to sell all my shares. I'm going to do this, I'm going to do that. Why are we not thinking bigger? It's like, okay, you could sell all your shares at $4, and I get it. That's life-changing money for a lot of people. I'm up here on my high horse looking down at everybody. I get it. But my thing is, if it's growing at such a rapid rate, and as we've talked about, how it's just accelerating even more, why would you sell early when you can continue to wait and they're growing 50% every damn year? It's like, I hate to make a comparison to like Amazon or Apple and any of those when they're kind of in the infancies, but it's just like you have to look at all these other things to be able to compare what they are doing. And it's like the blueprint is laid out, like it's happening. And I don't know why so many people just do not see this. Like I don't get if it's because they're not patient or because the share price truly fools them that easily.
Man,
It's like the business metrics have improved so much. It's just absurd. And why people aren't just doing cartwheels and buying this stuff hand over fist, that I do not get.
man,
It's like, holdings, I have a significant amount of it, and I have no interest in parting with that. They are truly doing a good job. See what they're doing. This is very good.
yeah. So I'm going to say a couple things there. It's with investors. I think it's instant gratification. Everybody's like, I want it now. They'll take better profit margins and a quick run to $1 or $2 and cash out and be happy. Where we're not looking for that instant gratification. We're looking for that long term holding, because guys like you and I, if it ran to $1.50 and we cashed out, well, okay, where am I going to put the money now? Because I'm just going to reinvest it somewhere else. It's we look at it from a different perspective, and it's that instant gratification. The other thing is over investing. I'm just going to say it, man. Some people put too much into a stock, and then when that stock doesn't do good, they freak the hell out. Well, guys like us, we manage our investments a little different, manage our risk. If it takes 3 years for this thing to uplist, that's whatever. Cool. It went down, we bought more. If it goes lower, we're going to buy more. We're in it for the long run, and if it takes several years to pay off, it doesn't hurt us. We didn't invest our rent money. So I get why everyone has their own perspective on it. And I also want to say that you don't want to compare it to these blue chip companies, but I will. I do all the damn time, because what the hell else do you compare it to? You got to look at a blue chip. Companies that start out like this and grow at this rate, well, they become multi-billion-dollar companies. So what kind of a company do you look at their track record that's not a multi-billion-dollar company? You got to look at them, because they're the only ones that were doing this shit in their early years. And you mentioned a couple. I know one of them was Netflix. I looked at Netflix in depth, okay? Netflix didn't turn a profit until it was their 6th year as a publicly traded company. And the same thing with Amazon. When you start out and you're growing 50%, 100% a year, you're focused on growth, and you get to where you're a $500 million, $1 billion company, then you transition into trying to get those better profit margins, because at $1 billion a year, you do industry average growth of 10%, that's 100 million in growth. Okay. Right. When you can do 100 million in growth, just do an average 10% growth annually, that's fine to be average on growth and focus on profit margins. But when you're doing, where they were a few years ago, 45 million in revenue, 65 million in revenue, well, you start focusing on profits then and just do the average growth of 10%. How the hell do you ever become a multi-billion-dollar company? You don't. 10 years out looks like shit. Yeah, you've got to become a big company first and put growth ahead of profits. That's how you get long-term become a multi-billion-dollar corporation. And the only reason to demand profits now over growth is just that instant gratification. It's short term. It's saying to the company, no, do something to blow up the share price today so I can cash out because I don't care about the company long term.
And that's what a lot of them are doing, and they're saying the same thing with share buybacks and
God.
all these other things. And I'm sitting here like, how about we just keep growing the company? How
Right?
about we do everything we can to grow a company who's just a little bit profitable? Because that's the thing. Like you said, when you finally get to be just a mammoth size, and then you transition to having a bit more profit. Well, dude, do you want to be profitable when you're doing 40 million, or do you want to be profitable when you're doing $500 million? So it's like when you sit back, they're clearly making the right moves, and it's really cool. And I hope people can be patient enough to see this and just realize the opportunity, because I think once some of it starts moving, it's going to be too late. Because like that's the thing. A lot of times, like Wall Street will ignore this stuff until they don't, and then it's a very violent move to the upside.
Well, and
But it's
another thing is, I talked a little bit about that. That look, 20 cents to $2 is 10x. It's a 10x return, and that's at this point $2 is pretty arguably a low end valuation. It really is.
right.
There is so much money to be made here that if an institution, they're not going to come in and buy 10,000 worth of shares. If they want to put $10 million in this company, we're talking about turning it into $100 million. That's 90 million profit on the low end. Okay, stocks like this, these kinds of situations, they don't go from 20 cents to $2 an uplist and then $4, and the only people to profit from that is retail. Okay. Wall Street always wins. Wall Street always has their hand in it. And with options like $90 million in profit on the table, I guarantee you that retail will not be the only ones to profit from this. So you and I see it every day. Man, we were just talking about it on iHub in depth. How many of us have seen the bid jumping and things like that, and it's pushing the price lower. And I had a bid in at whatever it was. It sat there, and I watched bids fill below mine. Finally, mine did fill, and it filled half a cent below what I was trying to buy at, and all that's artificially pushing the price down. And I can't prove it, man. It's beyond me, but I truly believe the price has been forced down and kept down because somebody is accumulating behind the scenes, and when they have the shares they want or enough news comes out that this thing just explodes and they can't hold it down any longer while they accumulate, it's going to fucking take off. And whoever's been accumulating those shares is going to make tens of millions, if not hundreds of millions of dollars, because Wall Street is always in there. It's never just retail making money like this, dude. There's going to be fortunes made, and retail just isn't. We as a whole have not figured this out and beat Wall Street. They're going to get their money.
Well, to your point, that is because humans still have the same psychology that they always have. When the share price goes up, they think the company's doing good, and when the share price goes down, it instantly means that it's a scam. So if you can always push them into that psychology, it's very easy to take advantage of that. If you have enough money to control the board and move prices around, flip things and bring stuff down a little bit and suppress it, it's very easy to get people to just keep selling out. And then you start to create a little bit of dissension amongst the people. And then you start saying, oh, there's going to be a reverse split, or there's going to be this or that. When it's like, it's all crap. None of that's going to happen. And like we just said, we can see the value of it. Like, why would you sell it at 20 cents when you know the value is worth more than $2-3?
Yeah.
So it's the whole thing is just, man, it's goofy. It really is.
Yeah. Well, let's rein it in a little bit. We talked about valuations. I went through what you and I went over in our last video. You had said you put it what you think's pretty fair at a 3.0 price to sales ratio. So I talked about that, and if they only did the 300 million revenue, if the shares did increase from this acquisition to 188.3 million, that puts fair value at 478. Is that That's where you still think it is today? Because me personally, I had said 1.5. I wanted to see a few things first. I want to see this acquisition, maybe some more profit. Um, I think they're there. I think that where I was at 1.5 is low end. I'm leaning closer to where you're at now. Are you still in the same area? Are you leaning higher?
I would stay firmly at 3.0. And just because I'm trying to be cautious, and I get that's aggressive, but I think with what they're doing, how they're actually accelerating their growth into increasing their size. Like again, it's fairly rare that you grow more as you get bigger. So that's the thing. I think they're going to more than double the revenue this year. And it's not like they were doing a super small amount. I mean, they did 140 last year. If they do 300 this year, that's people will be over the moon. But I just think the reality is if you add in another acquisition, they'll do a lot more than 100% increase. So I'm going to stay right where I'm at with that. Let's say we leave the shares somewhere around 188. Maybe this additional one. I don't know if more dilution would happen. The bond would address that. It's man, I just don't know. There's so much great stuff happening. I wouldn't even complain if there was an acquisition because this is just so darn big. And then, of course, you include the organic growth that they're going to have anyways. There's a lot. We could be seeing some smart gas stuff, some smart tank things. So that gets me pretty curious too. We could get 20, 30 million extra out of that. And maybe that's a small amount at this point, or people might see it that way, but I don't. Like all these numbers just keep increasing, and then that's extra revenue that's not telecom.
Yeah. Yeah, and what you were saying is doubling revenue this year. They did 140 based on preliminary numbers. Double's only 280. We both feel like they're going to blow that away.
Right.
We think 300 on the low end, just being conservative, but saying they're going to continue with the organic growth that didn't stop. 300 million would be 114% year over year growth.
Oh my.
Yeah.
That is gnarly. And maybe I should start chanting 350 million because the last time I was only saying 200 and they come out and say 250. So I think I really got to extend it beyond, what seems rational at this point, right?
Well, see, and same here because I go conservative and they blow it out of the water every time. You and I were talking end of the year 2023, and you were telling me all of Q4 they're gonna do 200 next year, and I said, well, let's see how Q4 performs. This growth is a little too crazy. And once we got the preliminary revenue and said 140 last year, I was like, yeah, no, absolutely, they'll do 200. But damn, how are they pulling off this growth? So we were both aligned that yeah, 200. They should easily do 200 this year, and then bam, a fucking acquisition, 250. And that was only what? Yeah, 3-4 weeks later.
Maybe we should be eyeing 300 to 350 now. Do we meet in the middle at 325 and then just be pleasantly wrong if they go past it?
So, man, I looked at anything we could look to project it out, and last year they said 105 and did 140. That's a 33% over what they were projecting. This year, right now, they're saying 250, 33% over that. 11 months from now, we're looking at, I think it was 332 million. So. I mean, that's what do you do? And what I put it out was I said, if you want to go aggressive with it, assume they're going to make another acquisition. It's fair to say 350 to 400 this year. They're going to have to do another acquisition to pull that off, I believe. But 300 plus as it stands is realistic. And with another acquisition, 350 to 400 would not surprise me. What about you?
I would say 325 with an acquisition. I'm right there with you, 350 to 400. But as far as I'm not willing to stick my neck out and say there's going to be another acquisition yet, just because we know sometimes these things can take a while. Maybe it happens, maybe it doesn't. I'm just going to keep my feet firm at 325 for the year.
Yeah, I am going to say that I'm 100% on board with what you said earlier, that if there's not an acquisition, it doesn't bother me one bit. 100% growth is enough for me. They're going to do 114% plus. I'm not going to cry over that. I'm not going to be upset because all I wanted was 200 million, and they're gonna do three. So I'm not going to complain.
Yeah, that's what I'm saying. It's like this is so outrageous, and people don't get this. It's like probably next year they will do 500 million. Like they're on
Yeah.
track to do that next year, and like we're already in February. Time goes really fast. Well, if you don't hate your life, I guess. But it's just the way the business is growing, man. Stuff is lining up, and it starts to make me think like they can reach that 1 billion valuation, or they can reach 1 billion way before they, you know, originally it was looking like 2030, 2032, but that goalpost has to be moved, and like that's probably for an entirely different video, but just the 500 million would be next year, and that's kind of what I'm eyeing now. Is like they'll get that.
Yeah, and you'll see in the video when it's posted that, last time we projected out 2024 and 2025. This time I didn't even put numbers for 2025. I talked about how we're laughing about it. Like, people were saying, "Oh, what will they do next year?" And we're like, "Fuck, we don't know. Call it 500."
Where I'm at for it now is it will be 500 million next year. Like I'll be aggressive and I'll throw that out. I'm saying 325 for this year, over 500 for next year. That is where my numbers are.
I'm not going to argue with it, Shane. I argued with you on 200 until they made me believe. I'm just not.
I'm brilliant.
Well, and what is it you say, that greatness recognizes greatness?
No.
All right, Shane, I'm gonna ask you, man, if you got anything else you want to add on. I don't want to make people listen for an hour and a half, but
I'm not a financial advisor. Don't sue me. Just assume I am a drunken moron. You shouldn't listen to a word I say or take my advice. Do not invest based on the words that I say.
Well, but I'm hearing contradicting information because Jeff told us all that we should pay you for investing advice.
Jeff's a nice guy. You guys can get a hold of me if you want to send me money for my work. I appreciate it.
All right, put it on the tip jar.
There you go. We'll have it laid out.
Shane,
I appreciate it.
Last question, man. Am I a financial advisor?
No, you're.
I'm not. I am not a financial advisor. Unlike Shane, I don't even invest for a living. Just a guy that likes charts. I like to do research. That's a good way to spend my free time, and I like to share it with you guys. So, Shane, I appreciate the call, man. Looking forward to discussing this more as things evolve, and just, man, it's exciting times. 24 is going to be fucking crazy.
Absolutely. And if things kind of play out a little bit differently, we're probably going to have to do another one of these and redo our valuations and everything and come up with new numbers. But that's not a bad thing. I mean, if they exceed our expectations, we all win.
That's what I said, was we put all that effort into that last video, and it didn't last a week, and they announced an acquisition. I'm like, well, there goes those numbers. Got to make a new video.
Well, hopefully it happens again, and I'm fine with that. That'll be good.
All right. Yeah, you have a good one, man.
You too. Bye.
Bye.